The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. Dow's down 28, S&P's unch, and this is a fascinating market. Comp index is up 7 at 41.98. You have got gold up 3 at 12.92. Forget the 1,000. 12.92, at least for now. And silver's up 16 at 20.32. High-grade copper suddenly spikes up. It's up 4 at 3.25. Crude oil is up $1 a quarter at 101.19. Yep, I think this is going to be very interesting. Bonds are down 20, 30 seconds at 132.07. Dollar is up 0.09, and you've got the euro down a fraction. So thank you, Steve, for 2 great hours. Boy, we have programming right to Wednesday today. Of course, Larry Pesavento comes on straight after me, and that'll be at noon Eastern time. And we just got programming all the way through, and I got to congratulate Dave White. I believe that was a terrific, a tremendous workshop that he had. And good going, Dave. And now let's do a couple of things here. What is that? Let me see. Oh, that's right. I'm on camera. I forgot all about it. I can't be wandering all over the show here. This is very interesting. What I'd said, let me just turn to my chart right here. Let me pick this up. And what I'd said to my subscribers, I show this chart every single day with the Chapman Wave notation. I'd said another big triple-digit gain. This is from yesterday at the close. I did the report for today. Suggests it's more than a bounce that will immediately slump through the 15,777 support at the 9 EMA. That's that purple moving average right there. It's also the start of the V-shaped uptrend support. Though the resistance I had drawn as a left side, right side price time match at 15,940 in the V pattern form from the low bar of February the 5th. And that's right there. And we spiked right through it yesterday. Not we, the Dow did. So it's also above that cluster resistance. But that 15,940 to 920 area is now the support that has to hold. So far, and then what I said is in the actual little report underneath it, and then I added to this, the VIX plunged to the 14s. That is a major reason for the power. Now, what I had shown was that in a number of the charts, but especially in the Dow, there was only a peak C right at the 200-period exponential moving average yesterday, and there needed to be a fractional move above 16,027 to get leg D. But that the V-shaped pattern said that the support so far, round about 15,940 to 15,930, should be pretty darn good support. And now look what we're doing. We've gone, I'm going to add this is today's report. This is the overview and market today section, which I'm told my subscribers they really enjoy because of the accuracy. And not only that, it gives you exactly what to look for, how the volatility index has made a trough D at 1408, and that it can have a little bit of a balance. And look, did it make a new low today? Yeah, it went to 1402. That is trough E. So we're at a point right now. Oh, man, I tell you, I did so much work. I haven't, for my subscribers, given a lot of buys or sells or anything. There are certain things that we want to grab onto for the long side. There are certain things that I'm looking at for the short side, but I'm really not interested in the short side at this particular moment. I'm going to explain why. The volatility index in the 14s, let alone the 15s, is just saying that there is such intensity in the buying at this particular point that I believe we are looking. I didn't have time. I wanted to do it. I just didn't have time to go back. But let's see if I can find a Dow chart, a Dow daily here. I'm going to explain something that I think is, besides being totally fascinating, it's really important. There it is. Okay, here's a good one. You see this takeoff bar. This is the Dow. There's no notation here. In fact, the red line, I could even take it away. It's the 9-period moving average. All I'm looking at here you see that beautiful candle, the low of the fifth? Look at the day following, huge triple-digit move. Second day following, huge triple-digit move. Then I said we should expect a doji candle, and there may be a pullback, but if we break to the upside, that is extremely positive. It is the type of rally we've seen before, like the one from October the 9th, where you get this huge candle followed from a doji bottom and another huge candle. Then you get a smaller candle. Then you get one pullback, and then you break out. I think we're in a very similar, last week I was looking at lower lows and lower highs, but did I expect that we would see the volatility index go from 21 to 22 area down to volatility index, VIX, down to, oh, of course, that's the wrong chart. So let me go here, right there, down to VIX.X, down to from 2148 in peak C. Remember, I've always said that it's great if you do get D's in the volatility index. It's telling you you've got a pretty big turnaround coming very quickly. But it's a subsidiary of other things. So I don't always expect to see, and very often in the weekly chart, you only get an A or a B and it collapses. Sometimes you get the D. Well, look at this. This is saying to me, be very careful on the short side. Why? Because this is buying pressure. And as long as the volatility index remains under 16.30, we can't get a pullback. There's no question. It's a little bit overbought. That's why I'm expecting, that's why I said we should get a pop and a drop today, a new recovery high, and then a pullback. So far, that's what's happened. But if you think of this, that volatility index, I just cannot rule out that the U-shaped cycle in the volatility index weekly chart, which accelerated to from a much longer, let me count it now, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, about 31-day cycle, 31-week cycle or longer, accelerated, shrank to a 15 to a 17 cycle date, and then pull back, just as it's done previously. I have to consider that if you don't take that into account as buying pressure, you could go short here, and that's fine, but it has to be a very quick short position. That's my thinking, and I'll be proved wrong if the volatility index starts to break into the high 16s, accompanied by bad news. So I'm trying to use these pullbacks as buying opportunities. That's just the way I'm looking at it in certain sectors, certain stocks. So let me go back here because I want you to do, oh, there's a question in the den. Can you please look at LO? Yep, I will in a moment. So that's the volatility index. Look at this, TLT. The TLT was doing very nicely. It went to a peak E above, that's the Lehman 20-year T-bond fund. It goes above the 200-period moving average to 109.34. Plop. It comes down so far. It's come down with the MACD and stochastic pulling back very sharply. On balance volume, relative strength, all pulling back very sharply in the daily. And the weekly has made yet another potential H pattern that goes to an M pattern. We've seen that so many times. What is very strong, and am I going to sneeze? Am I going to sneeze? I'm going to stop the sneeze by holding the nose. The gold contract has gone to an E/C, and a breakout in the weekly chart that is very positive for the MACD. Good, the stochastic only at 46%, improving on the weekly chart. But what's really important is now you've got 83% in the stochastic. So I'm looking at this and I'm saying something's going on that you have to appreciate that is different. You're looking at the dollar. Gold is rallying. We don't know the reason. It doesn't matter the reason. It is rallying, and the gold stocks are actually doing really well. What we're looking at here is that the dollar has pulled back sharply from 81.39, but it's really stuck in the weekly chart. It's just stuck in a trading range. My suspicion is as I've said for so long, years now, that the dollar is actually rallying, but it's in quicksand because the Fed has got whack-a-mole. They got their little hammer out, bap, 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 bap. Every time it sticks its head up above 80.97, somewhere around there, bang, gets hit in the head and comes back down again. I almost wanted to go to the DZZ, 200% short, the gold contract, thinking, hey, gold has to be pulling back at this particular point. Nice quick trade. And then I thought, what on earth? You want to go short one of the best sectors here, a sector that's been out of favor for so long and has just been showing internal strength? Not a chance. So now what I'm looking at is I've got to put this piece of the puzzle together. Look at this. QQQ. The Qs made a new recovery high. That says I can get rid of all this nonsense over here. It always looked a little bit weird to have that peak G in the weekly chart, and I can go back to the instant restart and say, aha, look what we got. We've got something even better. We've got an instant restart that says the weekly chart of the Qs have gone to peak A, peak B, peak C, and now it's in leg D. D very often goes to an E and even an F in instant restarts in the Chapman wave, but I don't even want to think that way. I just want to say breakout. MACD and stochastic are not particularly good in the weekly chart. MACD and stochastic in the monthly chart, didn't even know that there was a blink of an eye there. And you've got a V-shaped pattern in the QQQ series. So let's just do this. Let's go to the NQ14. Let's just do that again. Let's go to the NQ14. I will get to Laura, my question in the den. I will get to that. Look at this. This is because this is a little lesson in the Chapman wave technique. Because the previous peak trough A was way down at 3,354, there's a chance that this could in fact be a G/A. But so much about it, the manner of the increase, the characteristic, everything about it says that here again, I've got to exclude that it was a peak F. I have to say, there's a greater chance that this is just a brand new leg D in the weekly chart right there. Can't put in I have to take away the down arrow. And I have to say, you know what? So far, this is very good action in the QQQ series and the mini NASDAQ 100 March 2014 contract. Now look at the 120-minute chart, which is either recycled, F to G, no, FGA. Oh, in fact, this is AB. I'm calling this leg C in the 120-minute chart. No, I can't do that. Give me a second. I believe it's D. I don't want to do anything too quickly, but I know that I did do this in the NQ 300-minute chart, which I started to introduce to myself because of Bob in the Den, who's been using it so well. And lo and behold, we've got a left side, right side price time match to peak D.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and I have a question about Loriland, I'll get it right. Loriland, Inc. I believe. What's the tobacco? Let me just double check. I should have done that before. Now, I'm not used to this new setup that I've got here. All right. Am I going to even spell it correctly? Lori, L-A-N-D. Only 2 A's. A-N-D. And I'm going to put that in, and it says Loriland, of course. Loriland. There we go. Got it. So, cigarette... and why we believe menthol cigarettes, all right, or whatever it is. Yeah, it's tobacco. Does have a good dividend, I think 4%, but something happened to the stock today. It's down 2.79, down 5.59% at 47.16. But the weekly chart at the doji high back in, I think, was that July? No, it was later than that. It was in November at 53.27. It's hugging the 9-period moving average in the monthly chart. And the MACD has turned down much lower than it was when it made the previous peak E-top in July of 2012. And stochastics at 81%, which is good. Now the weekly is being impacted. It made a right arm extension going to a peak G doji top at 53.27. Now it's in leg B to the downside. What I did is I took a little bit of some of the techniques in the Chapman Wave methodology to do a left side, right side price time match target with the Chapman Wave inside wedge, and that says that round about the 24th of this month, there's a good chance that it'll be testing the 45s, I think. Yeah, the 45s. It's trading at 47.14 right now. So you can have a little bit of a bounce and then make its way down. But if this is a long-term buy and hold, I'd be a little nervous. That whole area to me is just, it's kind of taboo. It's the old way of thinking. I suspect that even if they've got different kinds of cigarettes or maybe tobaccoless or whatever they want to call it, I'm thinking this, I would not have this as a buy and hold. I would say that I'd put a stop on at least some of the position. 48, it's trading at 47.17. LO is the symbol, down 2.79. It broke under the 46.93 200-period exponential moving average, stopped just above the 200-period SMA, the smooth moving, simple moving average, and at 46.61. Even though I'm looking for 45s to hold, I'd probably say take this opportunity to lighten up a little bit. If you're in a long-term position, but you've actually taken a bit of a loss, you're going to have to think about it. But I tell you why I'm rather cautious on the stock. No, I'm not cautious on the stock. I'm kind of negative on the stock. Is because the weekly chart says that the bar of July, that made the high of July of 2012 that went to 47.02, also has a 41.71 low. And it looks to me at least a good part of that candle, which corresponds to a number of the candles, except for that massive move back in October of last year, those candles couldn't hold their gains. And my suspicion is it's going to go back into that. So the 45 area might be support, but I wouldn't be surprised if over the next few weeks it actually drops below that. Please be careful. If it's a buy and hold and you're in for the dividend, 3 to 4% is going to do nothing if the stock from here drops to the 43, because there's your 10%. I don't like to do things like that. I want a strong stock that's going to give you a dividend and it's going to move up and give you capital gains. This one looks like capital losses, but dividend gains. I don't like that. So please be careful. Now, best case scenario is that this was overdone. It's a bit of an overdone situation, and the rebound takes you into it's at 47.11, between 48.10 and 48.53, somewhere around there. Boy, I would say great opportunity just to lighten up. So in other words, I'm saying to you, at best, lighten up. At worst, I'd say if you're in a bit of a loss, you're just going to have to bite the bullet. I don't think it's worth messing around. 10% down, 1%, maybe 1.5% pop up. I would just be lightening up. That's my impression. Now, here's the other thing. If you're in it with a gain, I would capture that part of the gain right now, and then on the other position, I'd say, you know what? I don't want you to break today's low. So somewhere around between the 46.93 200-period moving average and the 46.52 200-period simple moving average, I'd be saying I'm probably going to take some more off if it breaks there. Let's go to Helen in Largo. Hi, Helen. How are you?
I'm good, Basil. How are you doing?
I'm well. I haven't heard from you for a while. You doing good?
Oh, I know. It's been a while, hasn't it?
It has. You wanted to look at?
ASM.
Vino, silver and gold. That just reminded me of this man, Mr. Vino. No, it wasn't quite a Vino. Who did the concrete in our basement floor.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. The Dow's down 46. Remember, we were looking for a pop and a drop. This is exactly what we wanted to see. Some kind of a digestive move down here. Now, it's interesting. I really had the choice of getting, let me just quickly show you this. We've got Helen on the line, but I do want to show you this because it's just very timely. The DXD made a peak F-top that's 200% short the Dow at 31.77, and right there was a chance that it could turn around. Made a peak D-top in the 120-minute chart, and it held exactly the 200-period moving average. I just didn't want to confuse myself by saying, hey, I don't want to do a very quick trade. I want to start looking at a position because I love what's going on, and we're going to go right back to the goals. We're looking at ASM. Now, I don't remember ever hearing about ASM. I've got that story about Mr. Anzavino. I won't tell it. It's a funny story. Maybe when I got time, I've got too many callers waiting online. Avino Silver and Gold Mines Limited. So, Helen, you are long this?
I'm long this, and I thought it had double-topped, Basil, but it looks to me like this thing made another new high today.
Yep.
And I don't know if it's going to that 2 years back, that 254, or, you know, what are your thoughts on this?
Okay, let me go through this a little more thoroughly here. What we're looking at is ASM, which is Avino Silver and Gold Mines Limited. Now, it's a chutzpah. How can they put silver before gold? I don't know what they were thinking when they made the name. It should be Avino Gold and Silver Mines, but maybe they do more silver than gold. But gold is the boss, so I don't know what they were thinking. It has consistently made peak Ds all the way from the buy, no, not from the buy, from the start, way back in November of 2000. Actually, that's when gold, if I remember correctly, I got a buy at 42 or 44 on the XAU. This is off the top of my head. So this went peak ABCD, top in 2003, pulls back. ABCD, top in 2006, pulls back. Brand new peak ABCD, top in April of 2011. And now it's gone AB. I have no reason why I can't think that this is going in the monthly chart to a C and a D. It's a very strong. It looks very good, number one. Number two is the weekly chart has just gone to a D in the cup formation, breaking out above the high of peak E at 1.95 back in the week of the 4th of January 2013. A very sharp drop, trough A, B, C, D, E. That was trough, not trough, but trough, down to the low of 0.81, and that was the week of 21st of June last year, and now it's trading at 209. This is very interesting because you're looking at the previous high, and that was the high of 254 made in March of 2012. Right. I would say you two things. One is, I believe that should be a target to the upside. That's number one. And number two, on a very short-term basis, there are a couple of things that are saying to me, there's a chance that it's getting a little bit toppy here, and that the good support that I see is on the 9-period moving average of 191. But if it actually tests 191, I would not be surprised that it's going to test 181, and that would be very good, because that could give 1 week of rest if it's next week that it doesn't make a new recovery high. Then that will make peak D, but with the MACD strong and the stochastic strong. That's why I think a high-level consolidation would be perfect, and then it can move on, and in the month of February, continue leg B in the monthly chart. I think you got in. This is a great-looking stock. It has a little gap way down at 133, 133 low to 131 high of the 17th and 21st of January. I don't see it going there. I think it could pull back some 10 to 15, maybe even 20 cents if it does consolidate. But I think you're looking at this as a longer-term buy and hold, correct?
You know what? The way it's acting, Basil, I have never seen such a pretty chart. I mean, I'm even looking at money flow with this, and money flow is even up quite a bit. So I like the looks of this thing, and I don't know what's causing the upsurge like this, but volume's behind it and everything. So, it makes me want to stay in.
Yeah, I'm with you, and I would think, okay, two things. One is from the chart that's forming with the different moving averages, I see some kind of a consolidation taking place. Could start today, could start now, but it could probably go into early next week, and especially if gold does have that bit of a pullback that I'm anticipating. I like it. I think you've got your eye on the prize here. I don't think there's going to be a peak D with a big pullback in the weekly chart. I can see it having a high-level consolidation, and it does have a habit of going to an E. I think I did the weekly chart going back further. Oh, let me just see if I can grab it here. No, I haven't done it going back. Oh, yeah, there it is. A, B, C, D, recycles, A, B, C. Oh, I do think that it's going to be a high-level consolidation. I'm with you. I like the chart. Congratulations on entering it. I'd never seen this before. ASM. It's on my list now, but I personally would be waiting for a pullback to get in, and just be prepared that it can pull back, and it could pull back to the 190, 180 area. That should hold. Okay. Hope that helps you.
Thanks so much, Basil. Appreciate it.
And congratulations, Helen. Thank you for calling. Good to hear from you again. Let's go to Janice in D.C. Hi, Janice. How are you?
Hello, Basil. I'm very well, thank you. Well, I've got a slight cold, so you have to excuse
I'm sorry to hear that.
Well, it won't last long, hopefully. I'm Basil interested. I'm long the nugget, the direction daily gold miners,
right?
NUGT, and I'm wondering whether it's doing a little bit of a pullback this morning, whether that's an ABC up or whether I should get out.
Okay, there are two things that are going on. First of all, folks, nugget is the direction daily gold miners 3 times a long position. Now, don't forget, folks, next week, I believe starting this weekend, Tom O'Brien will be up at the show in New York. I think it's always at the Marriott in Times Square. And he will be presenting, and I believe he's talking about the direction shares. He's talking about these particular shares. Now, what I'm going to do for you is just to say, first of all, congratulations on getting into Nugget. I think it's a fabulous thing. It was on my list. It didn't give much opportunity to get in because it's had such a big move. I'm looking at it now at 44.50, down 2.41. It has big percentage moves, obviously being a 300%er. But the spike that I see now, I have alternate counts for it. It could be a G, it could be a C, whatever it is. I suspect that over the next 3 to 4 sessions, there's a chance that it's going to test between 41, it's at 44, 49 right now, and maybe even hit the 9-period moving average of 40.37. I can't say for sure because this trade's kind of in its own orbit sometimes because it has such big moves. The weekly chart is in leg B, and that too is just a tad overbought. I think you're in a great position. Now, holding the 3 times is a little tough sometimes because they have deterioration every day. So my suggestion is twofold. If you have a really nice profit and a bigger position, I would say to you, taking just a little bit off here to reward yourself, I don't think that's a bad thing on the direction shares, NUGT, and I would be prepared to put that back a couple of points lower because then you've made 2 points that you would have lost. So that's my only suggestion, that if you have enough that you can take a little bit off right here at 44.47, be prepared to put it back between 41.70 to 40.36. And on that second position, I'd probably say I'd have a 1.5 point stop on that. And that's the only thing I can say. I think it's a good position to have. And all I can do is, in this particular situation, is say, the weekly chart is looking very good. The monthly chart on this particular issue is really poor, but I'd rather be looking at, the GLD monthly chart and say that is starting to act much better with an H pattern that is starting to succeed, and the weekly chart is looking good. So that's the only thing I can say. Either stay there, don't do anything, or take a little bit off to reward yourself, but you're going to put that back into the same position. Hope that helps you, Janice.
Thank you so much, Basil. That's very, very helpful.
Thank you for calling. I hope your cold gets better.
Thank you. Bye-bye.
Thank you. Let's go to Ari in Arcadia. Hi, Ari. How are you?
Jim Basil, I'm doing well.
You'd like to look at?
RGLD.
Now RGLD is the closest chart that I could find that looks just like the nugget that we looked at. This is to me, this has a combination of a right arm extension in leg F/B in the daily chart, leg C in the weekly, and if it could only break above 67.25, that'll be the first time you've got anything like a strong leg B in the monthly chart since it made its top at 100.71 way back in late 2012. Now, Ari, I know that you like to have buy and hold positions, or at least intermediate term positions. What exactly are you going to be doing with RGLD right now?
First of all, I think I can't see it, but I think your daily count. Could you look at your daily count in 2 days after A and take a look at 2 days?
So what we're looking at here, let me blow this up a little bit. Okay, folks, what we're looking at here, this is if you're looking at Tiger TV, this particular chart right here, I've expanded it so it's covering, that's the monthly on the right. Right here is the daily. I've got the low bar of 42.56 on the 3rd of December. I've got a peak A on the 4th of December because the next day was a lower high bar, and then it goes 45.26, 45.25. Ari, good eye. That's what you were pointing out to me, right?
Yeah, that's what I wanted to find where we differentiate, and now we know.
No, I missed it. You know, folks, I always say your only obligation in the Chapman wave is to be able to identify correctly where you are in the peaks. And if you don't do that, you subject yourself to being mislabeling and possibly getting out too soon or not getting out at the correct time. So peak D will be at, on the 3rd of January, at 49.79. Then you get, now, the question is, with a MACD so strong, I'm always inclined just to go alphabetically on. So the next one is E/A. The next, and that is the peak at, let me just double check, 51.44, yep, 51.44, 53. So, oh, no, that wasn't it. Yep, that's good. So now we're looking at, where did I go? And then EF/B is going to be 56.49 on the 22nd of January. And that corresponds to the decline in the MACD and the stochastic. And the real question is, are we in brand new leg A or G at this particular point? And I have to go favoring A and not favoring G. So A comes first. Oh, it could be, B. That would be B. Do you have a B/G or a G/B?
I got a G there.
Okay, so you've got a G. Now, if that F was G, I would have said that would be typical of what happens with the MACD fast-moving average acting like this. But because it was an F, I have to consider that this is either a right arm extension, which would be G, which would be the letter G, but because the MACD is very strong, the stochastic's at 91%, and as I just did with NUGT Nugget a few minutes ago, my suspicion is that there could be a high-level pullback. My inclination right now is to give a bias to B, but consider that based on I bet on the 120-minute chart, that's, I can't do this quickly, but I'll do it. 54.04. Okay, so this is A, B, C, D, E, F, G. There it is. That's exactly the technique that in fact, this is going to be a good example of how it goes to a G when the MACD moving average, the fast moving average, is still very strong. So in the 120-minute chart, we have got decisively a peak, at least I'm calling it for now, a peak G, because it's dipped underneath the 9 EMA. I do expect that there's going to be a pullback. Ari, the big issue for you is the pullback at 60.61, the 9-period exponential moving average, is that going to be the support? Does it break to the next moving average of 58.93? Or is it just going to hang out with this doji candle, the low of 62 round number that was made on the 10th, and then go to a new recovery high of 65.95? My impression right now, from the way gold and silver are holding so well, is that if by tomorrow at noon, at this time tomorrow, if the GLD, instead of being in the 124, 60 or 70 area, is actually at 123.75, then we could start to get a pullback that does take the Royal Gold, which is what we're looking at, RGLD, trading at 63.62, down $1.58. That could take it. That would be three points down to the 60.59. That would be quite a bit. My favoring right now is to call this B/G rather than G/B. B means I'm still anticipating there's a good chance to get to C. I'm also not going to dismiss the fact that gold, when it reverses, even in the shorter term, and we haven't seen that for a while, can do that fairly viciously. But I'm just anticipating that the weekly chart at 91% is just so strong that 58.46 is the 200-period moving average support. I'm going to ask you another question, Ari. Can you hold on?
Sure.
All right, Ari, holding on. Ari in Arcadia, and we're looking at the gold. We had a lot of gold bulls today, and
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Shorter segment coming up right now. I've got a bunch of things to do, but I did want to ask Ari. Ari, so your outlook right now is in Royal Gold, because I think it's looking very good. Technically, it just needs a little bit of a breather.
I'm thinking that it'll be on the monthly.
Yes, that means it'll move over 69. What was that? 67.25. Yes. And then I would be careful, and that might usurp the time period that gold is in this move up. I must say, in all my work, I'm still looking at gold having a good chance of retesting the lows that were made fairly recently. But at this point, it is one of the strongest sectors, and I wouldn't be messing with it on the short side. So I like it, but the only thing I would say on Royal Gold, I mean, I wouldn't even, in your case, I know that you don't want to chip and change and do things quickly. Only thing I would say is I would take something off now if you've got good gains at 63.39, and I put it back 3 points lower if it gets to 3 points lower. But what if it suddenly breaks to a new recovery high and you're out of that position? and you're holding it for intermediate term, I personally wouldn't mess around too much. My only thinking is very short term. It does need about 1.5, 2 points down to take a breather. It could even hit 60.55. Hope that helps you.
I appreciate it. Thank you.
And congratulations. Great entry point and a great position to have. So, folks, let's just do this. There are a couple of things I want you to do. One of the things that I like about the Chapman Wave methodology is that when you put the panoply of all these different things together, it forces you not to be dogmatic, to be stuck. And I'm not going to be stuck. I can see right now from everything that's happening. Look, the IBB made that leg D, and it's pulling back from the leg D. Is this it? Is this it right now? After Jim Grant went on TV yesterday to talk about the bubble in this sector, a man who's always early, eventually right, but almost always early. Just that's the technique he has. There are just too many people calling for this a major bubble and a major top. I think that now that it's broken to new recovery highs above the 254.11 level, there's a chance we could get an hysterical phase, a real bubble in the biotechs. That's just my thinking. I would have to change that completely if instead of being at 255.92 by Tuesday, Monday's a holiday, by Wednesday afternoon to Thursday morning of next week, it is below 247, preferably 246 to have some kind of degree of certainty. Then I'd say, wow, maybe that was the top. But I'm just thinking here out loud, and I'm saying, I can see there's a leg C in the 120-minute chart. I think it's going to go higher. I didn't think so before, but it's broken out, and it's broken out in such a way with the falling axe formation in the weekly that it could give you a 1-to-1 extension towards the 259, 261 area. That's my thinking right now. So I'm going through all these different sectors, and I'm saying, look at the cues. 1, 2, 3. We did that earlier. A breakout to new recovery high. Hasn't held, but it's a new recovery high. Is this a brand new A? Well, in the cues, it's a little different to the composite index. Here, the latest ABCD top to 89 round number doji high was made from 84.05. We went below to 83.74. I have to think that this is a greater chance now of being A than E. It can't be E because it's already gone below the start of the previous buy signal, and it's D in the weekly. I'm looking at the IWM lagging. Well, it used to be one of the better ones. Now it's lagging. So that's saying we've got a mixed market, and with a mixed market, it says the gyrations now can start to get much bigger, but that the leadership that has been and the leadership that could continue is something that you cannot ignore. I'm going to say, I don't care about all this stuff. Make it easy. The VIX index, if the VIX index starts to rally and goes to 1660, and the market starts pulling back, and they move to the 17s with bad news, then we're in for a retest of the
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
You're watching Tiger TV.